right, good peoples. Let's jump in here with Rex. I've got a few things to update you guys on. SEPI reported. SEPI announced their declaration yesterday. So I did a video just on that one. I didn't want to wait. And now I got a little bit more to tell you about Rex beyond FEPI and API, but let me jump into the FEPI FANG Innovation Fund. Um, it was down. I thought I just, sorry guys, let me check something here. I thought I just updated this and it didn't stay 4670. Okay, let me do a save. All right, so this one was down 2.6. What you care about is that it paid 98 cents. Well, look at its trending, right? 109, 115, 108, been much, much higher. So, as you know, the markets internally, more than just looking at the averages, are selling off. I think what we've got to really look at is Nvidia earnings coming out on Wednesday. Not quite as big as it's been in the past. I mean, Nvidia was everything, but as Nvidia has moderated somewhat, I mean, it's still a large AI hardware player here, no doubt. So that's going to have an impact. My view on that with the macro and all the other things going on in the market is this could get a little bit of a bounce with something good or the way they spin it to be good. But I think the algos are set up to take the market down in March. And I expect that to happen. I'm looking for sectors, but I'm not sure what, if any, is going to even survive other than being an inverse on indexes and so forth. But sometimes there's sectors that survive those kinds of things. So anyway, just be forewarned that the markets are looking a little ominous here. I'm not telling you to run for the hills and, we're going to have a 50% crash or anything. It's probably 10, 5, 10, 15% drawdown, but it can be ugly, especially if you're on margin. So just be careful out there. So 98 cents for FEPI, the FANG Innovation. API paid $1.35. That's also down, right? All you have to do is look at that. 3.3. I thought 2 months ago at 3.21, right? I code over here. I say weekly, but these are monthly. So sorry about that. Some of these things are weekly. That's just an error on my part. Let me copy and fix that. Different funds do different things, right? Um, and people are always changing. The weekly guys love to stay weekly. The monthly, generally, unless they're trying to catch, you saw Yieldmax come out with some weeklies to sort of on the indexes to challenge Roundhill on that. We shall see how they perform. I'll be right there to tell you. So that's what we got. So let's look at the SEPI was yesterday, right? It reported $1.57, also down, but its existence of pure crypto is much shorter in term of time. All right, let's look here. Here's your summary, Fepi Aipi, and you see days owned, right? I do take that into consideration, but I use 365. I use the last year. So when you're seeing an annualized return, it's not. The only reason I put that up there is it's important when you see something like SEPI, which has been out there 84 days and had 2 months of paying. So you're not looking at a length of time. And you look at this gain or loss annualized. Look at this. It's the worst. One could argue that the last couple of months have been a downturn. Yeah, they have. And when you get a new fund, that's really hit harder on that. But if you look at the pay, 26, 32, it's still annualized out to paying. So they're paying at a target price, or I shouldn't call it a target, but they're paying at a decent level. It's just a question of whether, if you jumped into SEPI and you bought right at 51.13, you're not particularly happy right now with those kinds of things, because here we are with today's close for SEPI at 41. Actually, this should be 41.81. I don't think 2 cents matters. Um, so, but the point is, take that with a grain of salt, but understand that. Now, something else for you guys, I wanted to share with you. Rex, when I was out grabbing this data, um, I updated my database like I always do. But I noticed some particular things that I had interest in and I think are going to become more important. As I said to you, I think ultimately this year in investing will be about commodities. There will be a certain pieces of AI I think that still perform well. But a lot of this has to do with the geopolitical tensions and war and other kinds of things where the war drums are always beating. So the better we handle that, um, and not that we really can, because I think once you fix one tension crisis, you have another coming up. But let me take you into something. So that's what I have for you. You can take a look at this summary. Here's your total dividends, right, over this 457 days, and you have a dividend return down at the yearly level at this point. Well, when you have 84 days, you have to annualize that, right? So these don't change radically. This one goes up because it doesn't have the full amount of days. This one is returned 33%, but that's over the full 457 days. So I bring that down. So if anything, Appy's been the leading performer here. And this is the part that you want to be concerned. These are holding up okay. Total return of almost 16% and one of 20% for FEPI and AIPI. So a lot of people like these. The question is, excuse me, what does this drawdown in the market do and how long is it? I should do another hedge video coming out. So I have some thoughts on some of that. So let me jump into my database sheet. The reason this is, if you watched other videos, this is where I'm building a large database. I'll make it in Google Sheets as well as in Excel. I'm not going to hand it out because I have an awful lot of this, but I will do requests. I'm still looking at maybe putting it on a website, offering it up for other people at a very small monthly fee where they can search. But this thing is getting more and more interesting because I can do a lot of trending on it. So let's go here and let's look at fund families and let's take Rex. Okay. So what I did today is I added 4 more entries. So you have all your data up here, right? The same kind of stuff you were looking at in that summary sheet. Okay, they're a monthly payer. They've got an AI, a FANG, a crypto, right? So I try and categorize it. I do 3 month yields, 6 month yields. When you see that there's no 6 month yield here because SEPI hasn't reached that. They only have 2 payments within their 3 month yield, right? Um, and so you start to look, these things still need to get updated here in terms of current price. And when I put it in Google Sheets, I'll be able to update that, although Google Sheets isn't perfect. Sometimes it messes up that update, but it'll be a little more automated over there. I've been testing Excel for a long time with this database table format, filtering. There's just so many things, pivot reports. There's so many things you can do with this thing. So I'm trying to figure out a way to offer a small, inexpensive monthly fee for people. And So the point is, let me jump into this shiny and dull. Okay, you guys know that gold has been running. I think gold will get pulled down here from the mid 29s. I think it goes to 31, possibly 3,300 this year, but I think it could easily go back to 2,700. A worst case scenario, if March gets ugly for the markets, it could go to 2,500. But it just sets up another opportunity to go to 3,300. The miners themselves have been underperforming, but why I like to show this kind of stuff, and I'm going to do a lot more on this. So now I can go search on gold, or I can go search on oil, or I can go search on, I think Granite has COMB, COMB, which is a bunch of commodities. So, guys, there are opportunities to hedge and be in other sectors or just addition in your income. But you notice here, before I didn't have anything that didn't have income. But I think it's important to have both. So this one, you don't worry about what week it's paying. It's not paying anything. But look at Shiny as an example. So this is a 3x, okay, ETN on gold. Well, if you think gold's going down, which I do, whether we get 3,000 this week and NVIDIA does something and all of a sudden, and that's the top, which is exactly what I think may happen. But if NVIDIA earnings aren't good and the market, continues down, then it's just ugliness for March. So look at Shiny and see what it's done. Okay, so it doesn't pay anything. So you got 3 consecutive months, just like the inverse. Okay, and just like the oil, it's not paying anything. Okay, these are 3x positive oil and 3x negative. What they did in NRGU and NRGD is they went out and they picked 10 of the biggest oil companies: Exxon, Phillips 66, Marathon, Valero, Occidental Petroleum, Hess Resources, Diamondback, EOG, and they allocated these funds 10% of these 10 big oil companies. Chevron's in there also. And you look at this. This is intriguing to me. So on the gold, we know gold's done well in 2024. Let's just go over the last 12 months, which is what I do in this. 3 months, 6 months, 12 months. So 12 months ago, the shiny fund was at 25.30. It's at 54.54. You see the 6 month value. So let's go over and look at total return. But it's going to be the same as the NAV because it pays no income. But look at this, the 12-month NAV on the gold fund, shiny, is at 115.57. You're getting up in Coney and Misty and income level. I get it. If you just want to focus on income, these don't match. But guys, to me, you should be diversified. You should have income investment, especially if you have a lot of money already. But you should have some growth in certain sectors, in my opinion. Okay. Used to be stocks and bonds. Well, I'm not so sure in the bond. You can go things that play. So Rex has FANG, 3X in the micro sectors, and they also have inverse. So I'll get to those as well sometimes when guys want to talk about hedging. And a lot of these funds have this. So shiny and dull. What is dull? It's exactly the opposite. How did dull do? It lost 66%. So my guess is if this gold goes from 29.50 and we don't in the next few days get up to 3,000, which anything's possible, then we're going down to 2,700 on the pullback, maybe 2,500. So these are probably going to generate a 25% plus by owning something like Dole. So there's just all, and some guys just want to play futures. When I was playing gold massively in the 2000 to 2011 run up, I was using futures, but I was also using ETFs. I was also using some of the big Newmont, Barrick, etc., and then selling puts and playing options. So there's all kinds of strategies. Give me your continual feedback on the database because I think this thing just opens up so much. Um, opportunity. You know, it allows me to do index comparisons. I can go out and look. We all know Defiant doesn't do too well on its income NAV. It has the highest NAV erosion, but you can look at the, you know, Round Hill, and then you can look at Defiance, you can look at Neos, you can look at, you know, Rex doesn't have exactly that, but Yieldmax is going into that category. So I've got the ability to do so many types of searches. I look at results over 3 months, 6 months, 12 months. I look at the NAV and then obviously the yield and add those together and get total return. All right, guys, that's what I've got for FEPI and AIPI. Next time, I'll go back over these guys and I will talk about what their holdings are. Maybe I can do real quick. I always update these each week. So just as a reminder, look at this. You got a 10% holding in NVIDIA. So API very much is going to be influenced by the earnings. I love Palantir, you guys know that, but I was calling for the gap fill. I got a couple of buys on Palantir and on PLTY. I'll be interested to see what the PLTW, I think, from Round Hill, but I didn't know it. It's easier for me to look at the PLTY chart and know where the gap fill was, which was at about 70. So I picked up some more on that. Now, that doesn't mean that doesn't go down more, people, in next month if March is a further sell off in the market. But from an income fund and just from long term in owning Palantir, you've got to do things when you see it and not try to pick the bottom. You can still DCA in for more, but you've got CrowdStrike, right? Security, Supermicro, Intel, Apple, Micron. Let's look at FEPI's. And these guys write covered calls. They own some of the stocks in here. FEPI, its biggest player is Apple before Palantir was its big player. So look at Palantir's down to 5.59. It was 7.15 the last time I updated this. So Microsoft, Alphabet, Adobe, Broadcom, a little more, I call them conservative, a little bit more Mag 7. You got some CRM software. NVIDIA certainly still a player in here. All right, guys, that's what I got for you on Rex. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is for fun and entertainment. Have a great one. I'll be back with many more this week. All right, bye for now.